this hearing of the Senate Economic References Committee into improving consumer outcomes, experiences and choice in Australia's retirement system. I begin by acknowledging the traditional owners of the land. Today's committee hearing will be conducted via video conference and in person. Senators Walsh from Victoria, or Senator Walsh from Victoria, as well as myself, will be on today's hearing. These are public proceedings being video streamed live via the web, and a Hansard transcript will be made. I remind all witnesses that in giving evidence to the committee, they are protected by parliamentary privilege. It is unlawful for anyone to threaten or disadvantage a witness based on evidence given to a committee. Such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. Witnesses also have a right to be heard in camera. The Senate has resolved that an officer of a department of the Commonwealth or of a state shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. If a witness objects to answering a question, they should state the ground upon which an objection is made, and the committee will determine whether it will insist on an answer having regard for the ground which is claimed. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. Commonwealth officers appearing today are also reminded of the Senate order specifying, the process of making a claim of public interest immunity. A copy of the order is available from the Secretariat. I remind committee members and witnesses who are appearing via video conference who are not speaking to please mute your microphones. I now welcome representatives from TAL Insurance. I understand the information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, please state your name and capacity in which you appear.
My name is Jenny Oliver and I'm the Chief Executive of TAL's Group Insurance and Retirement Business.
My name is Sean Branston and I'm the General Manager of Retirement and Wealth at TAL.
Do you have a brief opening statement of no more than 2 minutes?
We do, Senator.
Please go ahead.
Thank you for the opportunity to appear before the committee today. Today, TAL provides life and disability insurance to over 5 million Australians, either directly or through our superannuation fund partners, financial advisors or corporate partners. Over 4 million of these Australians are insured through our superannuation fund partners. As a result of this cover, through our superannuation fund partners, last year, TAL paid 30,000 members and their families a total of $2.5 billion in claims. These members and their families rightly expect their life insurance claims to be handled quickly, efficiently and with care. Paying claims is the most important thing we do and it receives significant focus and investment, and I'm proud of the support we provide to customers and their families during some of the most challenging times of our lives. It is, however, important I acknowledge the recent conversation about claims handling failures across the superannuation ecosystem. I'm sure this is something we'll talk more about today. And talk about what TAL is doing with our partners and their administrators to continue to improve the claims experience for their members across this ecosystem. These efforts aim to deliver simpler, faster and better claims experiences for superannuation fund members and their families. Given the terms of reference for this committee, it is worth noting that another area of focus for us at TAL is supporting superannuation fund partners with the development of their new retirement income products for their members so that they can retire with confidence. We believe life insurers can help superannuation funds meet their retirement needs, given the skill set in managing risk and supporting customers over the long term. With 5 million Australians expected to be retired in the next 5 years, we think this is an important work. Thank you again for the opportunity to appear and we welcome your questions.
Thank you very much. I guess my first question is, how many super funds do you provide life insurance to?
That would be probably somewhere between 10 and 15 super funds, off the top of my head, Senator Bragg.
Okay. And 15 large super funds?
Of various sizes.
Okay. And you provide death cover and TPD cover?
Death cover, TPD and also income protection cover.
Okay. But in the super fund, the average worker or average member would receive what sort of coverage generally?
It varies significantly across fund. Each fund considers the needs of their cohort and decides an insurance benefit that is appropriate for their fund. So those coverages can range from $20,000 in TPD up to a couple of $100,000. Very much depends on the design that the trustee determines is appropriate for their cohort, considering the demographics of their cohort.
What's
For
the
example,
So
For
what's the
example-
average death cover?
Again, it's very difficult for me to give you an average, Senator Barry, because it really does vary by fund and by age. It's important to note that not only is it a set amount, that it isn't a set amount by age for each fund. They developed scales that reflect the different needs for their members over their lifetime with the superannuation fund.
Okay, so what's the death cover at CBUS then?
I'm sorry, Senator Bragg, I don't have that information to hand. All I can suggest is that it varies by scale, by age, and it is available in their insurance guides.
You didn't think that would be a question you get asked today?
No, I didn't appreciate that, no. I can tell you that the average sum benefit that we do pay, I can share that information with you rather than the sum insured, if that's helpful. And I confirm
Well,
that...
I guess I just maybe just go back a step. So, I mean, are you aware of the significant public interest in these matters that are facing the CBUS super fund?
Yes, I am.
Okay, and so you're not sure what kind of coverage TAL is providing to CBUS members?
Yes, I am. I can
You are.
confirm
You are.
Yeah, okay. I can confirm that the average death benefit that we have paid for CBUS members is approximately $130,000.
$130,000. Okay. And so, what is your relationship with CBUS like?
In terms of the nature of that relationship, Senator Bragg, I'm very happy to unpack the relationship and the structure of the relationship that we have with CBUS, and similarly with all of our superannuation fund partners, if that's helpful for you.
Yes, please.
Okay. I think it's important to note in the context of the conversations that are being had at the moment that there are two types of claims that members can make with their superannuation funds. The first type of claim is a non-insured death benefit claim. Typically, these relate to family members and their estates claiming on their loved one's superannuation account balance only. There's actually no insurance attached to that, and therefore we as life insurers aren't a party to that process. We see that around 60 to 70% of all death claims made to superannuation funds don't actually have any insurance benefit associated with them. That noted, however, the second type of claim will have an insurance component associated with it, in addition to the claim on the member's account balance as well. It is for these claims that the life insurer has a role to play alongside the trustee and the administrator. Typically, and the process that falls through that is typically a member or their family will contact the fund or via their administration function, which can be insourced or outsourced. The administration function will check that the member had cover at the relevant date and then move to work with the member to collect all the necessary information that's required to provide to the life insurer for us to commence our assessment of the claim. Once that minimum information has been received, we will then move to assess the claim. Upon the completion of that assessment, the life insurer will confirm to the superannuation fund their decision, and where the decision is to admit either a death or TPD claim, we will then forward those funds to the administrator. Thereafter, the administrator will work with the trustee to finalise all the necessary processes to attribute those life insurance benefits to the member's account and ultimate to the member or their beneficiaries. So you can see there's a couple of distinct processes in there.
Yeah, I understand that. So does your relationship with CBUS differ from any other super fund?
No. In the contractual relationship that we have with superannuation funds is underpinned by the products that we provide. So the relationship that exists between ourselves and a superannuation fund is that we provide them a life insurance product. And that comes with all the obligations and regulations that are associated with the provision of life insurance. That's slightly different to the contractual arrangement they have with their administrator.
So the CBUS relationship is the same as every other super fund. And if I take your testimony there, you're saying that it's the super trustee, the super fund, that makes the judgment about whether a claim is made. Is that right?
We make a judgment and assessment as to whether or not we will admit liability on the insurance component of a claim, and then we confirm that decision to the trustee, and where the decision is to admit, we will then pay those funds to the trustee, typically via their administrator.
Okay, so then what is the role of the trustee?
I understand that the trustee has a number of obligations that they need to exercise once we have passed those funds across. But as I said, our contractual relationship starts with the receipt of the claim and does actually finalise once we've made the decision and paid the money across to the trustee.
Okay. So you don't get asked to provide payment until the trustee asks you to?
No, we pay the money upon making the decision on a claim. We pay the money across to the administrator, who I'm not sure what sort of trust arrangement they will put that money into, but ultimately I then expect that they distribute that to the members' accounts.
Now, I guess my question is more a process flow question. So is it
Yep.
Is the trustee the first entity which makes a judgment to pay a claim, or is that the insurer, TAL in this case?
As I said, we have our policy with the trustee, so we will confirm our decision to admit and pay a claim.
So you confirm the trustees, do you?
We confirm to the trustee that we are admitting the claim, and then we pass the funds across to them.
Okay, but that's after the trustee has agreed that there is a claim.
Yes. So at the commencement of the process, the administrator will confirm that the member has cover in place at the date of event, and that cover has been paid for. So they confirm at the commencement of the claim that there is a cover claim to be made, and then we assess it, and then we pay the funds to them.
Okay, so at the top of this process flow, it's the trustee is at the top of the process flow. They have to make the initial judgment as to whether this will go into a claims scenario where the insurer will actually make the payment through the administrator.
I think we're talking the same thing. I think we're aligned. The administrator and the trustee will determine whether or not they believe that the member is eligible to make a claim. They will then pass it across to us. We will assess the claim. We will determine the claim. And in the circumstances where we determine it is appropriate to admit the claim, we will then confirm that to the trustee and pay the funds across to the trustee. Again, that would typically sit with their administration function, whether that be insourced or outsourced.
Okay, but if there is then a significant delay in a member being able to get a judgment made by the parties, the party that the member contacts is the trustee, isn't it? They contact the super fund.
We've seen circumstances when members will reach out directly to us, but we also understand that they will reach out to their fund, again, typically via the administrator.
Yeah, so the organisation on the hook legally and in a practical sense at the top of the food chain is the super fund, isn't it?
I understand that the super fund has a number of regulatory obligations they have to comply with. I do note, however, Senator, that we too, as the life insurer, has a number of regulations and obligations that we have to comply with. We have to comply with the policy document and service agreements that we've issued, but we're also bound by the Life Code, Corporations Act, and we're a voluntary subscriber to the Life Code of Conduct.
Has CBUS ever complained about TAL's services?
We've got very strong governance processes in place between ourselves and CBUS that ensures that there is a very regular ongoing review of our operations and our outcomes. Where there is a dip in those results, there is constructive conversation around how we can recover those and return them to an appropriate service standard. There is very strong and robust regular meetings, reporting and conversations around those circumstances. Okay,
so there hasn't been any complaints? CBUS hasn't complained about your services?
To characterise it as a complaint would probably not be appropriate, but to suggest that we work together to ensure that we are achieving appropriate outcomes and realising any opportunities to improve them would be a better characterisation of the conversations we have.
Yeah, and who do you deal with at CBUS?
We deal with a number of people over across at CBUS. We deal with the executives responsible for insurance, but we have relationships through the business.
Do you deal with the board?
No, we do not.
So you don't have any engagement with the board or the chair?
Not directly, no.
Okay, so
Nor
these
do
are
we.
all judgments. So these are all judgments made by the executive, are they, of the fund to engage TAL?
I'm not sure of the governance processes that exist within CBUS, but I can confirm that we have engagement and relationships with the executives at CBUS and then also those people that are involved in the management of the insurance product and the insurance claims management.
Okay, I'll just write out the call now and go to Senator Walsh, Deputy Chair.
Oh, thanks very much, Chair, and thanks for being with us on this inquiry today. Can you just expand on the types of insurance products that you provide for super fund members as part of these sorts of contracts?
Yes, certainly, Senator Walsh. As I previously said, we provide 3 types of products, typically through superannuation funds. Largely that is provided through what is called their default arrangements. For some funds, they provide death and TPD, and I'll explain those in a moment, death and TPD insurance as part of their default arrangements. However, for other funds, they've determined that it's appropriate to provide death, TPD and income protection. Really interestingly, there's a belief that I think still is in society that life insurers protect people against death primarily. Today, we actually pay 70% of our claims for people who are living. Death insurance, I probably don't need to explain, but TPD insurance is payable when somebody, as a result of an injury or illness, is unable to work in their occupation for which they are qualified by their education, training and experience. The last insurance that we provide is income protection insurance, and that sees the payment of a regular and ongoing amount where somebody is unable to work because of injury and illness to replace their income.
So in relation to CBUS, it's primarily has its membership in the construction industry and related industries there, and you've talked about TPD cover and income protection that might be needed for periods out of the workforce that people have. I think the construction and building sector is known to have some risks associated with it. Even when the best safety practices are in place, there's still risk there. Do you think it's important that CBUS provides this sort of insurance to members that is, specific and useful to the circumstances of the construction industry, the building sector, given the risks that the workforce can face in those sectors?
I absolutely do, Senator Walsh. I've worked with CBUS for a number of years, and I've had, prior to this role, I spent 5 years as TAL's Chief Claims Officer, and in that role, a number of claim files came across my own desk for me to review. And to hear about and read about the circumstances facing a number of CBUS's members, particularly the challenges that they have faced in the what we would call heavy blue and dangerous occupations, and to see that the injuries that they have sustained really has reinforced for me the need to provide insurance to these members. And I do note that CBUS worked very hard to ensure that their members who worked in a dangerous occupation continue to be afforded the right to have their insurance through super. For a 65-year-old that has worked in a manual occupation, driving large trucks or being a rigger, the payment of a TPD benefit can provide enormous benefit to their family as they transition through to their life where they are no longer able to work in that role.
Thank you. So obviously the product is really important for people in these dangerous occupations. And it's clearly important that people are able to access their benefits in a timely manner. And there have been concerns raised about some aspects of that in relation to CBUS and with ASIC taking action on that. You went through TAL's role in the process there. where, you have a contract with the fund and you have a policy, members are referred to you by the trustee, as I understand it broadly, and you make a decision about whether you're admitting liability. Do you have any useful information for the inquiry about the sorts of timeframes that you follow in relation to the part of the process that is yours in terms of doing the processing around whether or not to admit liability?
Yes, I do, Senator Walsh, and I agree with your comments around the importance of those benefits that we provide. For CBUS, just a couple of comments. For CBUS last year, we paid approximately $371 million to their members. That is a significant impact for those members and for society that supports them. In terms of your specific question around decision times, I can confirm that typically there's a great website called MoneySmart that publishes the decision times of the insurers in that part of the process that I discussed. On average, death claims are admitted within 1 month. TAL matches that average, but it's important to note that 85% of the death benefits and 87% of the death benefits that we have paid on behalf of CBUS have been admitted within 2 weeks. For TPD, the industry average decision time is 4.2 months, and for TAL we do that in 3.6. And then for IP, the average industry decision time is 1.7 months, and TAL we do it here in 1.5 months.
Okay, thank you for that. There were some reforms under the previous government that removed automatic life insurance from certain super accounts, and there's currently an exemption for people who do work in dangerous jobs, I think including the construction and building sector.
That's correct.
Why is that exemption important, and what would you view as the risks if any future government further wound back those sorts of exemptions?
Senator, you've hit on one of the most important attributes of insurance and super, and that is that the access that insurance and super provides to Australians on a default basis. All members are accepted into insurance and super arrangements, and that's really important, particularly in the case, it's an important concept to understand, particularly in the case of those members who otherwise would not get access to life insurance if they were to pursue that individually. And that is the case for people who work in dangerous occupations. Sometimes they are unable to access life insurance because of the occupation that they work in. But by giving the dangerous occupations exclusions in the insurance and super environment, they are able to access life insurance where they otherwise may not be able to. So it is significant in terms of the access that is afforded to people who work in these important but dangerous occupations. Conversely, as I said earlier, the work that I did in claims, we then see those claims come through from those people who have been working in those circumstances. We have heard their personal stories and the impact that that has had on their families, and we understand the impact that we can have by providing financial support and ongoing assistance through that period. So it's incredibly important that dangerous occupation exclusion is maintained, because, as I said, otherwise there's a real chance that these people who are doing important things building Australia will not be able to access life insurance.
Yeah, thank you very much for that. I'll just go to a broader set of questions. This is a inquiry into, how we can improve our retirement system in general, and there has been some commentary and some response from government about the retirement phase of superannuation and what role insurance and different kinds of retirement products might be able to play in improving retirement outcomes. In your submission, you did say that insurers and funds can play a greater role to help Australians manage and prepare for retirement. What are some of the ways that you think insurers can help Australians in the lead up to their retirement, and perhaps in terms of, products that may be available to them, to have certainty and to maximise the payments from their accounts.
I might make some opening comment.
You've just gone on mute, at least from my end.
Is that better? Senator? I think it's really important to understand that. Sorry, we're just getting some refurb here.
Yeah, there's an echo.
Is that better? Can you still hear me, Senator? Okay,
Yeah, we
great.
can hear you. Go ahead.
We're really excited by the current momentum that exists in the retirement space and the work that we're doing with our superannuation partners. It is fair to say, as an industry, we recognise the monumental movement within the Australian society and the demographic with 5 million Australians approaching retirement. And we really feel like we can have an impact supporting those Australians retire with confidence. And the impact and role that we can play is around ensuring people's so that they continue to have income even when they're savings. Effectively, we're insuring people against living too long. And we've got unique skills, having dealt with mortality and morbidity experience, ensuring people during their working lives that we can then transition across to their retirement lives. I might hand over to Sean just to make a couple of comments about the types of products and what we hope to achieve with those products.
Thanks for the question, Senator Walsh. There's probably two key products that we're seeing emerge in the retirement space. A key trend we're seeing is that the products for lifetime income are being simplified. They had been in the past quite complex, which has prevented sort of take up in demand. What we're seeing now is you're seeing the what would be a traditional annuity, where a insurer will promise to pay a member a set amount of income for the rest of their life, and that income amount will be known and guaranteed for the rest of their life. The new category that's emerging is what we call an investment-linked lifetime pension. Under that product construct, the insurer steps in to promise that the member will have income for the rest of their life. However, the member can remain exposed to the investment markets and use the super fund's investment capability to achieve a higher income throughout their life. So the promise is there to make sure it lasts, but the fund can control sort of the investment strategy to get that higher income level for members.
Okay, thanks very much. Do you want to ask a final question? No, okay. I just wanted to, we're almost on time. I do have a couple of quick questions for you at TAL. So in 2020, 2021, CBUS had 49 complaints according to AFCA, then went to 68 in 21, 22, then 116 in 22, 23, and then 191 in 23, 24. So what do you think is driving this high level of complaint of CBUS's services through AFCA?
Senator Bragg, in all honesty, it's difficult for me to comment on that because I don't actually have the insight as to what's underpinning the complaints. I can share with you what typically underpins complaints that we receive at TAL, and usually it's members not necessarily understanding or having a clear expectation of what's going to happen for them during the claims process, or feedback given through that process. But I'm sorry, Senator, I'm just not across what's underpinning CBUS's complaints.
So you don't know, as the insurer, why CBUS is dragging the chain on these death and TPD claims?
No, I can't give you a credible opinion on that, sir.
You don't know, okay. What is the contract that exists between TAL and CBUS that allows a bonus payment to be paid to CBUS if there are fewer claims made?
I wouldn't characterise it as a bonus payment, Senator Bragg. What I think you're referring to is what we typically call in the industry as premium adjustment models. And the objective of a premium adjustment model is primarily to ensure that members of superannuation funds pay efficient and fair premiums. The way a premium adjustment model works is we recognise there is uncertainty in determining what the ultimate claims experience will be, but we determine the initial premium based on our best estimate. But there can be variations and volatility in that. So a premium adjustment model works to align the ultimate premium to the actual claims rather than the expected claims. And it does that by reviewing the claims that are received against the initial expectations. And that can see adjustments in premiums made over time. That can see payments flow between the insurer back to the fund into their insurance reserves. And then similarly, we can see payments go from the superannuation fund back to the insurer. So it is not a sharing of my apologies. It is not a sharing of profit. It is an adjustment to the premiums over the longer term.
But it does establish an incentive for the trustee to pay fewer claims, doesn't it?
I don't believe it does, sir.
Okay, let me read you.
Are there incentives within our business to pay fewer claims and decline claims would be incorrect and inappropriate to characterise. I can confirm that every claims consultant within our organisation, and when I was the Chief Claims Officer, anyone who has delegation to make a decision does not have any incentives or KPIs associated with the amount of claims they decline. Rather, they're incentivised on the quality of the decision that they make.
Let me read to you from the CBUS website, which says, we have an arrangement with the insurer under which we may receive a payment from the insurer in years where the level of claims compared to premiums is low. I mean, that would suggest to me an incentive to pay fewer claims or to maybe drag out claims. So are you able to provide on notice the contract you have with CBUS which deals with these payments?
Yeah, I'm happy to take on notice to understand what we can provide you in that regard. Very comfortable to do so.
Yeah, but you don't think it provides an incentive?
No, I don't.
Okay, well, most people would look at that and say, well, that's an incentive for a fund like CBUS to not pay death claims and to gain a financial benefit, which you can then pass on to others, including perhaps shareholders like the CFMEU.
I can't comment on that, Senator. I don't believe it provides an incentive to deny claims. And as I said earlier, a number of the death claims that are subject to the current conversation don't actually have any insurance attached to them. I do note that included in CBUS's annual report, they include disclosure around these arrangements as they relate to movements in their insurance reserves.
Yeah, it looks pretty murky to me, but thank you very much for your time and evidence today. We'll now move on to our next witness. I now welcome representatives from MUFG Pension and Market Services. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, please state your full name and capacity in which you appear.
Thank you, Chair. My name is Vivek Bhatia. I am the Chief Executive Officer and Managing Director of MUFG Pension and Market Services.
Okay, thank you very much for being there. Do you have a brief opening statement?
I do, Chair.
Go ahead.
Thank you, Chair. MUFG Pension and Market Services is a global organization with over 6,500 employees in 11 jurisdictions, with more than 3,000 of these based in Australia. We operate two businesses, both of which are considered as national critical infrastructure providers in Australia under the SOCI Act. The MUFG Retirement Solutions business provides end-to-end administration services for 20 Australian superannuation funds, which approximately manage 843 billion in retirement savings on behalf of around 10.5 million Australians. Of this, we provide insurance claim services to a portion of our clients, being 16 out of the 20 super funds, and represent about 8.4 million members. On behalf of our clients, we have processed over 56 billion in benefits, pension, and insurance payments to Australians over the last 3 years, answered over 3 million calls, and responded to over 2 million email and chat inquiries. We've also provided critical security and fraud monitoring services to protect members' balances. Our other business is MUFG Corporate Markets, which is a share registry and corporate services business for listed companies and unlisted funds, which operates in 11 markets around the world. Firstly, I wish to address the serious matters of delays in insurance claims processing that has been an area of focus in this inquiry. I apologize to the members and families of members where delays have been experienced, especially at such a vulnerable time in their lives. We have and continue to work very closely with our clients, insurers, and their other stakeholders involved in the overall insurance process to make sure that these instances have been remediated and that we collectively improve the experience that members, claimants, and beneficiaries receive. Like many organizations, we emerged from COVID-19 into a full employment market with widespread skill shortages and a significant increase in claims volume. It was during this challenging period where some members did experience delays. Since then, we have continued to collaborate with our clients on initiatives around member experience, processes, and resourcing, as well as partnering with them and other stakeholders to remove some of the complexities in the insurance claims process. As a result, we are seeing significantly improved processing times across stakeholders of all claims processes across the funds we serve. The insurance claims process is a complex one involving multiple parties, including the trustee, insurers, and ourselves. The issues highlighted recently are sector-wide and will require all stakeholders to collectively improve the experience that members receive. Certain challenges, such as binding beneficiary nominations, etc., are definitely required to be able to ease and expedite the claims process. We also recognize that the significance of Australia's superannuation sector and the critical role that these funds play and service providers play. As such, we welcome a broader discussion to introduce service standards to lift the overall member experience across the industry. We see this as an opportunity for all parties in the ecosystem to ensure a consistent and superior outcome and experience for members across the sector, because that's what Australians deserve, a better experience. Thank you, Chair, and thank you to the committee for the opportunity to appear. We are now happy to answer your questions.
Thanks, Mr. Bhatia. I want to take you to the issue of the CBUS allegations, where it's been alleged that CBUS has not been able to make insurance claims in a timely manner to people who are dealing with a shocking death in their family or people who have been seriously injured at work. And there's great public interest in why this is happening. And so I guess I should start by asking you about the chair of the CBUS Fund, Mr. Wayne Swan, has been going on to the Today Show on Channel 9, and he has said on the Today Show that, quote, the cause of this lay principally with a third-party operator. So, I mean, what do you say to Mr. Swan, who is wanting to blame the CBUS non-payment of death benefits and other payments on your company?
Thank you for the question, Chair. So, as I said, and I refer back to my opening statement, the insurance claims process is a pretty complex process, and it involves, on an end-to-end basis, multiple stakeholders. We also operate under very clear business rules that each fund provides us. Each fund has a different service level agreement that we sign with, which measure different things and provide different guidelines in terms of what the SLAs look like. It is very difficult to point fingers at one party or the other, to be really honest. I think the reality of the issue is, as I've said before, is that we need to have clear standards, and clear standards which basically say what are the cycle times end to end. Once those cycle times are determined, I think there's clear expectations that can be set in terms of what claimants and beneficiaries during a very, very vulnerable time in their lives can expect people to turn around. What documentation is that they need? What information is it that they need to provide to make sure that in an expedient time their claims can be considered?
Yeah.
But also ensuring that there is binding nominations,
Sure.
Which will definitely help the expediency of the process.
Sure. And then we had an opportunity to ask Mr. Swan at the Senate hearings, and I asked him whether it was appropriate to blame your organisation, Link. And Mr. Swan said, quote, I think there is a challenge with Link. It's a subject of public discussion, not just for CBUS, but for a number of other funds, end quote. So effectively, again, on the record of the Senate and in national TV, the CBUS Fund is blaming your organisation. So why do you think CBUS is seeking to blame your organisation for their judgments?
I probably can't speak on behalf of what the chair and Mr. Swan is his point of view. That is his point of view, and I respect that. I think from our perspective, what I can say is that we have strong relationships with and long tenure relationships with, as I said, 20 superannuation funds where we do provide end-to-end administration services, in most cases lasting for more than 10 years. And yes, time and again, as there are in large operational areas, there are challenges, but we have always worked together to ensure that we can remediate them. We can look at where the opportunities are for correction and modification, and then we can ensure that we can deliver the right outcomes as per our contractual agreements.
Okay, so do you agree with Mr. Swan or not?
Look, I think given the matter of ASIC investigation and the current open investigation that is happening, and the fact that we have also provided evidence to ASIC, I would respectfully decline to answer that in this forum if I can, please.
Well, I guess I'm asking you whether you think that you are to blame.
I think, from my perspective, Chair, the only thing I would say is that, we have submitted a lot of evidence as part of the ASIC investigation. We have also had a lot of conversations as per the requirement of the regulators. And given it's an open investigation, I probably would not like to make a public statement about where the apportionment of blame lies. I think that is for ASIC to determine as the regulator.
Okay, because the issue here is that we are investigating this as a matter of public interest on behalf of the Australian people. So generally, we would expect a witness to answer a question unless you have some particular reason. So again, my question is, what do you make of the statements that you are to blame for this very material problem? Because these are matters which may be subject to an ASIC inquiry, but they're also dealing with legislation that Parliament has passed to enact this compulsory savings scheme and to embed default insurance in it. So if it's okay for a chair of fund to blame an administrator for something, then it's a very big deal. So I guess what I'm looking to get from you, Mr. Bhatia, is what do you make of these statements that have been made publicly blaming your organisation?
Chair, I'll just note that the witness has answered that question twice in the same terms, and it's generally understood to be an acceptable answer that something is in front of a regulator or in front of a legal process. I'm happy to have a private meeting, Chair, if you'd like to.
Well, that's not how the standing order works. So I'll ask Mr. Bhatia to answer the question in relation to, do you have a particular answer about being blamed for the failure to pay claims in a timely manner?
Look, I think, I would say, Chair, again, that from my perspective, given the open ASIC investigation, I would not like to comment on apportionment of blame at this point in time.
All right. Well, we won't have a private meeting now because I don't want to waste the committee's time, but we may have to revisit this with you because you need to make a particular claim under the Senate standing orders. You don't have, unfortunately, the right to not answer. But I don't want to waste the committee's time now because we have limited time with you, Mr. Bhatia. So how many funds do you service at the moment?
We service 20 superannuation funds when it comes to administration.
Okay. And who makes the decision to pay a claim? Is it you? Is it the insurer? Is it the trustee? How does it work?
There are certain delegations that through our service level agreements and through our contractual agreements that we have in terms of collecting information, etc. But we don't make final decisions on any claims. Our work is, as an administrator, to collect information and to pass that back to the trustees and the insurers to make the claims, to make the decisions.
Okay, so a spokesperson for the Link Group gave comments to the AFR about these matters in response to what Mr. Swan said. And do you know about this?
Yes, I do, Chair.
Okay, you do. Okay, so you're happy to give comments to the Australian Financial Review, it seems, about these matters, but maybe not to the Senate. So it says here that the decision you said, or maybe your spokesperson said, that the decision-making authority rests with the trustee and insurers, and we operate under extensive business rules that vary for each fund. So who is ultimately responsible if claims are not being paid in a timely manner?
So as I said in my previous answer, Chair, we do operate under business rules, and I did make the same statement here as well. We operate under business rules that are provided as part of our contractual agreements. We don't make decisions on the payment or the beneficiary. We provide all the information that we are asked to provide to the insurers and the trustees, who then make the decision.
Okay. Did you have any meetings with CBUS before this public hearing in relation to this hearing?
No, I did not. Okay.
So they haven't suggested to you that they didn't really want you to get into these matters on the public record?
No, they did not.
Okay. So then ultimately, what is the average processing time you have for all super funds?
Yeah, the processing time is a bit challenging for me to say. I'll probably ask Dee to comment on where we are, because we measure different service level tasks as opposed to end-to-end cycle time. But if I can ask Ms. McGrath to answer that question.
Yeah.
Yes, of course. Chair, it's specifically related to death claims. We are currently paying the majority of death claims, probably around 70% within a 5-month time frame. That does vary depending on the type of claim and the complexity. And the time that it takes for some claimants, obviously, who are in a very vulnerable state, to be able to gather information and provide that to us. So it does vary depending on the claim and the time frames associated with gathering the information.
So you pay 70% within 5 months?
Yes.
Okay, and what's the numbers for CBUS?
I couldn't give you exact numbers, Senator, but that would be an average across all of our clients, and I wouldn't expect that they would vary greatly.
Okay, I'll just rotate the call now. Deputy Chair.
Oh, thanks, Chair. Thanks, Mr. Bhatia and Ms. McGrath, for being with us. Mr. Bhatia, I wanted to ask about some of the challenges that you outlined that you had before during the COVID period, and also what changes have been put in place. But I just wanted to clarify that you were there in your role with Link prior to it being acquired by MUFG back in that COVID era. That's right, isn't it? Yeah. You're on mute at the moment, but I got that as a yes. You were there.
Sorry.
In 2020.
Sorry,
yeah.
Deputy Chair. Yes, I've been in the role since November of 2020.
Yes. Okay. So you mentioned the COVID staffing challenges that occurred at the time. Did the COVID early release scheme also have an impact in terms of the number of engagements that you were having with members that needed to be processed?
I will, if that's okay, Deputy Chair, I'll pass that on to Dee. We did a majority of the early release super before I started, so she would be able to give us a much better idea.
Thank you, Mr. Bhatia. Deputy Chair, through the early release program of 2020, I guess, and finalising sort of into early 2021, there were 2.4 million claimants and around $18 billion that we processed through that period. Across our business, there certainly were higher volumes in a number of areas, including the changes, that people were looking for in their investment options in volatile markets, and so it was a heightened period of transaction processing across the board.
Yeah, and so you've had staffing challenges, you've had the COVID early release scheme. You've obviously got a significant market share as well. So you have a large number of member accounts. What are some of the other trends that are impacting your timeframes in terms of processing times, or that were impacting your timeframes in terms of processing times during COVID?
Deputy Chair, the resourcing challenges that we experienced in coming out of COVID, we have addressed, and obviously there were significant volumes. There were resource challenges, and there obviously were increased transactions across the board, including claims. That has been addressed, and we've continued to work with all of our clients to make sure that we are collectively looking at the end-to-end experience and how we improve the engagement and the cycle times associated with people at their most vulnerable.
And obviously, as a large, I think the largest provider of administrative services, you, I'm sure, would agree that you needed to be in a position to deal with the challenges as they arose. But are you saying that you now have a structure in place that deals with the volume of member inquiries that you now receive?
We've certainly worked hard to ensure that we could respond to the demands. Obviously, the resourcing challenges aren't as critical as they were coming out of COVID, and we have, worked on both our systems, our people, our processes to ensure that we can meet the demands of our clients and members and employers in the market.
And the COVID challenges again were reduced workforce numbers and increased demand from fund members in relation to early release.
Yes, and not just early release, but certainly, I guess a lot of uncertainty through that period. So there were a lot of people that were asking questions and looking for input into what they should be doing and how they ensure that they, protect the savings that they have worked hard to save over many years.
Mm. And obviously the products that you're administering on behalf of funds are, absolutely crucial to people's economic security and their feeling of personal and emotional security as well. And so in having this really significant market share that you've described to us, you have really significant responsibilities in terms of the work that you do and providing a responsive approach. Can you talk to us about how you're working with CBUS in particular to address service levels to members? Are there improvements that you can describe to us that you're working on?
Yes, thanks, Senator. We work with all of our clients, including CBUS, across a number of areas, and obviously we have a broad range of services that we provide, and so we are consistently looking at ways in which we can provide the channel of choice for members to be able to access information or to be able to make a specific request or transaction. We constantly review the experience so that we can identify, friction points and improve those. We consistently look for opportunities that might be automation, information, education, and self-service, where members would like to be able to, do things more digitally. We continue to look at systems training and the experience to consistently uplift what we do as an industry.
And this work, I think you said, is being done across the board with the funds with whom you have contracts.
Correct.
If I can just also add to that point, Senator, if I may, is that's part of our ongoing process. We have weekly stand-ups and monthly forums with each of our clients, and we always relook at what are the key things that we need to change and pivot, given the volume of work and transactions that happen. So that is a work in progress for us across all funds.
Thank you. I mean, you would expect a sort of a continuous improvement program to be in place. And what is you described to us before that you have 20 funds, 16 for whom you administer insurance, and all of that is publicly available information. Do you have an estimate of what your market share is in terms of services to funds, both in terms of whether there are other private operators in the market, but also in comparison to insourcing of these sorts of administration services?
So thanks for the question, Deputy Chair. So we serve about 10.5 million member accounts, which basically are across the 20 super funds that we administer services for. That, if you look at the number of member accounts perspective, that is circa 40%, 40 to 42% of all member accounts. And so the other 58-60% accounts are either served by other providers or are managed in-house.
Okay.
And so I'll just ask one more question.
Yep.
So, I mean, I think some people who are listening would think that you've got 40% market share, and on the one hand, it's important for funds who have, a duty to maximise returns and reduce costs for their members. On the one hand, I think many people would think that that's, it's reasonable for funds to try to find efficiencies by working with a private provider. But on the other hand, if those savings come at the expense of staffing levels and processing times, I think that many people would think that that is not an appropriate system. So are the savings that you provide based on efficiencies, or are they based on insufficient investment in some of the systems that you're maintaining?
Thank you, Deputy Chair. So it is definitely the former. It is a result of scale. When you have 10.5 million member accounts, then we have the ability to invest across those accounts, and obviously it gives us efficiency as a result of the scale. To give you an idea, we invest more than $200 million every year in technology and systems and in processes. We also have a very robust fraud detection process. We also make sure that we have cybersecurity that is very fundamental. We are classified as critical infrastructure under the SOCI Act, and so by its very nature, it comes with a lot of responsibilities and duties that we take extremely seriously. There is no other provider in the system, and I'm not, to the best of my knowledge, not even any of the in-house providers who actually have that high level of responsibility when it comes to providing critical infrastructure.
Okay.
Thanks for your evidence.
Thanks very much. So I guess I'm interested in what's different in your arrangements with CBUS to other funds. Is there anything different?
All our arrangements, Chair, are very different to each other. So I would classify that there is no standard arrangement that we have across any of our large clients.
Yeah.
They are all pretty bespoke, and the arrangements, the service level, the standards are actually co-built with the funds over months, and sometimes it takes a long period of time to determine what is it that they want for their cohort of members.
So with the service level agreement with CBUS, is there a longer timetable provided to make assessments on claims?
As we said, Chair, we don't make the assessment on claims. We ensure that we collect the documentation and then we provide that information to the parties as the representative from TAL said before. The assessment is made by the insurer, and then the trustees decide in terms of the beneficiary payments, because it depends on who the beneficiary is and if there are binding nominations or non-binding nominations, if they have lapsed or they haven't lapsed, and so.
What's best practice then, from your point of view? What would be best practice?
I think having clear standards on end-to-end, Senator, is I think something that is going to be a great thing that this inquiry can highlight. Ensuring that we have clear standards on end-to-end cycle times that all funds and service providers can adhere to, that regulators can monitor, and most importantly, that Australians in their vulnerable times can expect and understand what their responsibilities are as well. And
is that end-to-end standard or timetables and the like, does that exist now with your arrangements with CBUS?
It doesn't sit at all for any of the funds at the moment, and it doesn't sit across the industry either.
Right. So there's no timetables in service level agreements?
Not for end-to-end cycle times, because there are different parties involved for different things. And also, there is uncertainty in terms of, by when the information comes back, solicitors needing information, death certificates, or understanding of medical certificates, etc.
Well, do any funds have end-to-end standards?
Not that I'm aware of. I don't know, Ms. McGrath, whether that's untrue or whether you know anything different.
The funds would have their standards that they, I guess, they sort of target themselves, but there is no industry standard across the entire industry.
Okay, so what would be a good example of a timetable that would, if it was in place, would have avoided all these people having to go through this anguish, like 10,000 people?
Thanks, Senator. I think over the last several weeks, the regulator, has come out and clarified some expectations, which is that, for non-complex claims that, that those are paid within a 4 to 5 month period.
Okay. So your view is you don't need law reform, you just need the super funds to set out better agreements with their service providers?
Senator, I wouldn't contextualise it as such. I think that the industry has served Australians working and retiring very well, and everyone
clearly
is
not.
driving.
That's not right.
Yeah.
That's not right. We wouldn't be having this inquiry if that was true.
I think the industry is striving to ensure that they continue to do better for Australians.
Mr. Bhatia, what do you think about this? Should there be law reform, or can the industry solve this?
I think that the industry, working with the other stakeholders, including regulators, can come up with a code of practice, which is what other sectors of financial institutions have done. And if you have a collective code of practice that the industry can adopt, then everybody can adhere to it.
Yeah, well, surely you have a better idea of what would be best practice. Surely you have some idea of how this could be done better.
What we can definitely say that we need to do better collectively as a sector, because, as you rightly pointed out, there are many Australians who, in their vulnerable most times, haven't had the best experience or outcomes.
Yeah. Well, look. Finally, Mr. Wayne Swan, who has said a lot about your organisation, also said more broadly recently that there was a paucity of competent administrators more broadly. So what do you think he's getting at here?
Again, I don't want to understand his viewpoint or what he meant by that. But what I could say is that this is a highly competitive environment. We have local and international players in this market, who provide a plethora of options for administration. And we saw one of them, highlighted last week in the press, an American company as well, who has got a significant experience in the market. And there are many other organizations who do that. Plus, there are software solutions that some of the funds adopt to be able to do certain parts of the value chain in-house that they believe are more precious and more valuable to their members.
Okay.
So I believe that there is a modular option. A lot of options are there in the market.
Okay. So you don't agree that there is a lack of competent administrators?
I don't agree.
Okay. So you have answered that question, but just for completeness, you did not answer my question earlier to respond to Mr. Wayne Swan's comments, which have slammed your organisation's credibility. Now, you don't want to answer that question. I just need to understand exactly why you don't want to answer that question, because there is a process we need to now go through. So why don't you want to answer that question?
Chair, because there is a live ASIC investigation and a live court case, which is in the legal matter between ASIC and CBUS, we are clearly an interested party in that. And we have been actively involved in that, giving evidence to the regulator in the investigation. So I would not want to preempt the decision of either the regulator or the legal system on that. Okay.
Well, thank you, Mr. Bhatia. We'll come back to you on that. And we thank you for your evidence today.
Thank you. Thank you very much. And I wish the committee members a Merry Christmas and a happy holiday season.
Okay. Merry Christmas.
Thank you.
Merry Christmas. So we now move to our last witnesses, which is the Treasury Department. I understand the information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, please state your names and capacity in which you appear as you take your seats in Canberra. So good afternoon. So we'd just like your names and capacity in which you appear, please.
Okay, I might start. Nina Pye, First Assistant Secretary, Retirement Income and Superannuation Division.
Andre Moore, Acting First Assistant Secretary, Financial System Division.
Rob Preston, Assistant Secretary, Financial System Division.
Victoria Woolley, Director in the Retirement Income and Superannuation Division.
Adam Hawkins, Assistant Secretary, Retirement Income and Superannuation Division.
Okay, thanks very much for being there. So we have some questions for you. I imagine you don't have any opening statements as per the usual convention. So I guess in relation to these best financial interest duty issues, when the government was elected in May 2022, did it ask the Treasury to look at the best financial interest duty?
Senator, I might just commence with, I've been in this role for 1 month, so I wasn't there, but my understanding is that the government did ask Treasury to conduct a review of some of the reforms that came in under the Your Future, Your superannuation reform, and that included looking at the best financial interest duty. That review was conducted by Treasury in 2022, and the government announced its response in 2023.
Okay, and why did you, well, what exactly did the Treasury recommend?
So I don't have the advice of the Treasury, but the government did not make any changes to the duty. What has occurred since then is in July 2024, APRA released enhanced prudential standard and practice guidance. That's the strategic planning and member outcomes. Those amended standards will apply from 1 July 2025. It does, in that standard, note that a prudent RSE licensee is required to have clear attestation about the controls that are in place and that they are operating effectively to prevent expenditure that would be unjustifiable in the context of the best financial interest duty.
Okay, so that would tell me that you would expect that a trustee would make particular reference of how it is complying with the duty.
That is correct. So the legal obligation on trustees is that they need to ensure that they are acting in the best financial interests of their members. The decisions that they make need to be supported by evidence and analysis. APRA is responsible for taking action where there is evidence that a trustee has not acted in the best financial interests of members. APRA has published a letter that speaks to how it's intensifying its supervisory approach in relation to superannuation fund expenditure.
So have you had an opportunity to read the Deloitte report into CBUS?
I have.
Yeah, so what then did you make of the Deloitte concern that there were insufficient efforts to document how expenditure might meet the best financial interest duty?
I might make the point, Senator, that as I'm sure you're aware, this report was commissioned as part of enforcement action that APRA is taking. And so APRA imposed additional licensing conditions, which led to Deloitte being appointed as the reviewer. Deloitte has made 26 recommendations, and the process now is that CBUS needs to work with Deloitte to develop a work plan to give effect to those 26 recommendations that they've agreed in principle. And so that the matter is really an enforcement matter now for APRA to take forward.
I understand that, but if there is, I mean, Treasury drafted the law, right? So if it says there's a reverse onus, then doesn't that mean that the trustee must, under the law, document how it is making judgments about spending members' money?
That is the requirement under the law, and under the framework where that requirement is not met, APRA is responsible for taking action.
Yeah.
So in order to meet
the reverse onus, you need to make effort to document what you're actually doing with members' money. You can't just assert that you're getting value from something, can you?
No, that's exactly the point that APRA has made in the published letter that was released in, I think, October.
Okay, so the law is effective as far as the Treasury is concerned. The law is drafted. There's no problem with the law. So
I'll just explain what the law is. We're certainly monitoring closely the actions that not just APRA but also ASIC is taking, and we're going to continue to monitor regulator actions. And as we do, we'll provide advice to government.
So, I mean, as you know, a lot of these issues have arisen because of the howling conflict of interest between the board of the super fund, where people feel that they may be compelled to actually work for the CFMEU rather than work for the members. And this has led to a lot of these issues being manifested in public. So has the government asked for any advice in relation to the governance and transparency of the super funds?
I might just make the point, Senator, that I can't comment on sort of individual cases. I think Treasury's role is to provide sort of policy advice across the superannuation system as a whole. Part of what that involves is kind of looking at what's the regulators are doing, looking at industry practices, looking at sort of the public discourse, and we just provide advice routinely to government on all of these issues.
But hang on. But I understand that. Before you answer the question, I just want to make that point to you that these are laws that the Treasury Department ultimately owns. And so if there's a situation where an organisation has been shown not to document their expenditure, then you would expect there to be enforcement action, wouldn't you?
I would expect the regulator to look at that and then consider what actions they would like to take.
That's right.
It is an independent regulator. Yeah.
Okay, so on your role as advising government, has government asked for advice on the governance of these super funds since the latest revelations have occurred in respect of the CFMEU and CBUS issues?
So, Senator, as I said, we consistently provide advice and information to government. That's just a normal course of business for Treasury, depending on what we see sort of happening in industry, regulator actions, and sort of the public discourse. So we're there to keep government informed.
Have you provided advice on the equal representation model?
Senator, I think I've sort of answered this question. We provide advice to government constantly as part of BAU on a range of different issues that relate to the superannuation system.
Have you received anything specific in the last couple of months on this issue?
Senator, as I said, I've only joined a month in this role. I'm not sure what you said when you said, have you received anything?
Have you been asked to do any particular piece of work in relation to the governance of the super funds since these major issues have been profiled in the past few months, particularly in relation to for example, most people would look at it and say, it seems very strange to me, the CFMEU is allowed to own 21% of a super fund, in this case CBUS, even though it's been put into administration by the Parliament. So I would have thought that the government may have asked you for some advice on those issues.
The point I would make is and again, I can't comment on the individual case, but irrespective of kind of the governance of the board, the composition of the board, it's very clear that trustees have a legal obligation to act in the best financial interests of their members. They have a legal obligation to prioritise their members' interests where there is a conflict of interest. They have an obligation to ensure their directors meet the fit and proper test. And if those obligations aren't met, APRA is responsible for taking action.
So have you provided an oral briefing to any ministers about these issues in the past month?
Senator, I might take that on notice. I think I've given you the best answer that I can.
Okay. Have you written any minutes about the equal representation model and the governance issues in the past month?
In the past month, we've just provided, as I've always said, advice on a number of different issues relating to the superannuation system that go to what we see happening in industry and the regulator actions.
Okay. So then what about the payments which flow from the super funds into the unions? I mean, the CFMEU, for example, will receive, again, on current trends, over $1 million from the CBUS fund in the next year. So have you provided any advice to government on that issue?
Senator, the advice that we're sort of we look at the framework as a whole. From our perspective, the framework is very clear that trustees have a legal obligation to ensure that expenditure is in the best financial interests of their members. APRA has published a letter indicating that they're going to intensify their supervisory approach. They're also on the record as saying that they will take action to hold trustees to account. That's very much consistent with the statement of expectations that government has set, which requires APRA to promote an efficient superannuation system that delivers for members and holds trustees to account.
Okay, so can you outline the topics of advice on superannuation that you provided to the government in the past month?
Senator, I don't think it's appropriate for me to go to the content of advice that's provided to government. Our role as Treasury...
What are the topics? What are the topics?
I don't think... So, still fairly new. I don't think it would be ordinarily the case that I would identify the topics that we provide advice to government. Our role is to provide advice on the superannuation system generally, and the topics that we advise on will depend on what are the things that we are observing.
Okay. I thought you were taking on notice whether you provided any oral briefings on these superannuation governance issues.
Yes, I have taken that on notice.
Okay, well, I'll be grateful to see what you come back with, and I'll give the call to the Deputy Chair.
Oh, thanks, Chair. I just note in relation to the Deloitte report that the Chair's been discussing, and I quote, "The level of cooperation was exemplary and generated great insight into the technical skills and experience of the board." Second, that the board appointments to CBUS were found in the Deloitte inquiry to be fit and proper representatives. That in relation to the equal representation model in industry super funds, the report found that concerns about a representative model, quote, does not appropriately reflect the robust governance mechanisms put in place by organisations to fill and maintain board positions, nor recognise the unique protection of member and employer interests by bringing those voices directly to a board meeting room. And finally, that partnership agreements with both unions and employer associations are recognised to be important for retention and growth in industry super funds, which of course are key deliverables to membership. And the review noted that CBUS has a partnership spend assessment framework in place used to assess the benefit of those agreements. And proceed to questions. So questions are about the government's financial advice reforms. So the government has recently announced the next tranche of the Delivering Better Financial Outcomes package, and the package creates a new class of advisor to provide affordable and accessible financial advice to Australians. Can you tell us what the benefits of these financial advice reforms will be for Australians as they approach retirement?
Yes, I might just start with the broader context. So the central objective of those reforms is to meet what is considered a large and growing unmet advice need. The Quality of Advice Review sort of found that 61% of consumers have unmet advice needs. It's based on survey research that they reported in their report, and critically 4 in 5 Australians aged 45 to 54 said they needed financial advice but did not have the capacity to pay for that advice, so they were unadvised or pushed into unregulated sources of advice. The package itself has 5 broad components which all work together to really address that unmet need. There is the new class of advisor, which you mentioned, creating a new class of advisor. It modernises the best interest duty. It reforms statements of advice. It clarifies the rules on what advice topics can be paid through superannuation. The critical thing about that is that it ensures that there's a consistent and common understanding of what can and can't be paid for out of super in terms of advice. And that's expected to lead to more consistent practices across the industry around that. And also it will allow super funds to give nudges, which essentially will encourage their members to engage with their super, particularly at critical life stages, to make better and better informed decisions about their super. In terms of the government's announcement, the recent announcement on the 4th of December, the main focus of that was making some refinements to the design of the new class of advisor to ensure that it you could get maximum benefit out of that reform, in particular by allowing licensees to charge for that advice, which means that it can be utilised by a wider range of advice businesses and in broader contexts. I'm happy to go into more detail, but I might just stop there as a first answer.
Is there a way that you could describe the difference that someone who's a member of a super fund who's approaching retirement and is seeking some financial advice, the different access to information that they would have after these reforms are in place?
So the reforms sort of allow for a broader spectrum of advice interactions. So those interactions can range from just general information, use of calculators, general advice, right through to fully comprehensive advice, which typically the member would have to pay for themselves. Yeah. What the reforms do is that they enable super funds to provide that spectrum of advice, but particularly advice around narrow and more defined topics. So should I contribute? How much should I contribute? Should I contribute more? Particularly some choices around the transition to the retirement and the years leading into that, and to provide that advice at scale and more cheaply, because they're not going to be driven into comprehensive advice provided by professional financial advisors or relevant providers, as they're referred to under the law.
And just relatedly and finally from me, the government's been focused on the retirement phase of super, and I think there's a general understanding that there's a need to improve information but also products so that members have security about accessing their accounts. There's been discussion about improvements by funds to products like lifetime annuities and so on. Can you tell us where we're up to in terms of reforms to the retirement phase of super to strengthen those retirement outcomes?
I might ask Mr Hawkins to take those.
I can take that. Senator, the Treasurer on the 20th of November announced reforms to the retirement phase of superannuation. It will become increasingly important to have these reforms as people move from the accumulation phase to the retirement phase. The changes announced are intended to support Australians in retirement by empowering them to make the most of their superannuation, and that's through sort of trusted information, better products, as you talked about, and greater transparency from funds. I might just run through the reforms that were announced. The first was enhanced independent guidance on the MoneySmart website. The government will expand and refresh the resources on MoneySmart so that retirees get easier access to independent, reliable information. So that'll be things like more calculators, updated tools and more information. The Treasurer also announced targeted improvements to existing innovative income stream regulations, and the purpose of these targeted improvements is to support innovation in quality retirement products. There are things like money-back guarantees that consumers are looking for, that funds would like to offer, but there are some frictions with the existing regulations. So these targeted improvements go to address that. The third change was that Treasury will develop best practice principles. They'll be voluntary. Their purpose is to guide industry to design modern, high-quality products, and the purpose of that is to ensure and reinforce, actually, that government expects Australians to have access to well-rounded retirement products that suit their circumstances. The fourth reform that was announced was a new retirement reporting framework on retirement incomes, and the purpose of the new framework is to enable monitoring of retirement outcomes in a consistent and transparent way, and that will commence from 2027.
Thank you very much. Thank you, Chair.
Thanks. Just finally, before you go, I just wanted to understand whether or not the Treasury done any work on customer service standards, because we heard from the prior sessions that the industry's view is that perhaps these issues to do with CBUS not paying insurance claims in a timely way could be addressed by the industry through industry standards. So has the Treasury done any work on these issues?
So at this stage, I think the work that's underway is actually by ASIC. So as you may be aware, ASIC has commenced a multi-year project looking at industry practices and compliance. The first stage of that process is
Sorry, I don't wish to cut you off, but I'm asking you as the agency advising the government. I mean, you are responsible for advising the government on the law. The regulator is there to enforce the law. So I'm just asking you whether there's been any consideration given to law reform in relation to member service standards.
So as I was saying, Senator, sorry, part of the reason I wanted to go to this is in terms of this multi-year approach that ASIC is taking, their next key step will be issuing a public report in early 2025 that will actually bring together data on claims handling, and I think that would be the basis upon which we would have a look at the practices, and then determine whether there's further action that is required.
Okay, so you haven't done any work in the Treasury on customer service standards in the recent past?
So the work that we're doing is just monitoring and seeing what ASIC is doing in this space. They are very active in this space at the moment.
Okay, but in this term of Parliament, the Treasury did do a body of work to review the best financial interest duty, didn't it?
They did. That's correct.
Okay, so they looked at the best financial interest duty, but nothing on customer service standards.
So the work that we're doing is, we always look at kind of issues that are coming up that we're sort of observing, but I think the lead at the moment is the work that ASIC is doing in this space.
I would add, Senator, that the financial accountability regime is commencing in March 2025, so that will designate accountable people within super funds. And that includes a focus on customer service, member services. So I think there are a few developments happening where we are waiting to see what happens with industry. I'd note industry are also putting out additional guidance themselves and looking at these issues. So I think what Ms. Pye said is right, that there are a number of things going on across industry, regulators, plus reforms that have already been put in place that kind of need to coalesce early next year.
Yeah, I mean, the FAR was policy of the prior government. So I guess my question was, is there any work on insurance standards? For example, has the Treasury done anything to look at whether there will be a minimum response time from a super fund when they are deciding to process an insurance claim? And I think your answer is, well, ASIC is doing a piece of work.
So there is a piece of work underway with ASIC. We're always thinking about these issues. It's very much a live issue, but the engagement lead right now is ASIC, and that's primarily because they're going to gather the data that would be important for us to look at. Yeah.
Seems like a very skewed priority. It seems like a very skewed priority to have reviewed best financial interest duty, but not to have done any work on trying to make sure that members were getting the best possible outcomes from insurance claims when they were made. But nonetheless, that is your testimony. So we thank you very much for that today. And the committee has agreed that responses to questions on notice should be provided by the conclusion of business on 17 January 2025. I thank everyone for their participation in today's hearing, and the committee is now adjourned.